I'm gonna bring it to the table. Don't mean you gonna eat. But if you eat here at this here table, you're gonna be well taken care of. A lot of times we run out of money.
Yeah.
We run bankrupt because we're in debt. But if you know how to accumulate your money and invest your money, you make it go further.
Ooh.
You can make as much money as you want to, but if you ain't saving nothing, you still don't have nothing.
Sorry, a tax strategy every small business owner should know, but probably does not. Why is there so many taxes? Before we get into this episode, we gotta shout out our sponsor, Pose for Lola. This episode is sponsored by the luxurious photo booth that brings people together. I've personally used the Lola booth 2 times for 2 separate events, and let me tell you, it definitely was the life of the party. Visit poseforlola.com or follow at poseforlola on Instagram to book your experience. And let them know Conversations Unearthed sent you. Now, let's get back into the episode. What's up, guys? This is Brianna Moore, your host of the Conversations Unearthed podcast, where y'all come from me, but you stay for the guests. Today, y'all, oh my gosh, I have a heavy hitter in the building. I am so excited to introduce you guys to none other than Miss Artensia Delbridge. Artensia is a seasoned finance professional with over a decade of experience in the corporate and financial sectors. She serves as a financial representative. Are you still a financial representative with Financial Growth Partners?
I am.
You are? Okay. And is the founder of Journal Audits.
That's correct.
A Richmond-based tax and accounting firm established in 2019. Artensia supports a diverse range of clients, from startups and small businesses to nonprofits, using a holistic approach to develop tailored financial strategies that drive sustainable growth. With a master's in accounting and affiliations with NATP and the Association of Black Tax Professionals, she brings both expertise and heart to every partnership. Welcome, 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 Miss Artensia Delbridge. How are you doing today?
I'm doing well. Thank you for having me.
Absolutely. Thank you for coming, because I think we've been trying to schedule this, and you've been busy. And I've been busy. We've been trying to work things out. So, when it's the right time, it's the right time. Before we get into this, we'll get into a lot of the finances. How's your heart? How you feeling today?
I'm feeling amazing. God is good.
Absolutely.
And so I'm just coming off of tax season, so I'm not burnt out. I'm full of energy and rejuvenated. And so it's just a blessing to be here.
Okay, cool. And we talked a little bit about what is on your heart to talk about today.
Yes.
That the people need to hear.
Yes.
Because we in a rough time right now, and I know you work with startups and small businesses as well. We at a time where Trump is president, and the financial state of a lot of people in our community may be on the brink of losing Social Security or SNAP benefits, and then you have the tariffs and things like that. So we need some professional expertise right now. But I know you wanted to talk about some tax strategy, using a professional versus doing it yourself. But I'm going to start with one of my questions, and I'm going to let you get into it, because y'all, she got her notes out. She done wrote down what we going to talk about, and I really appreciate that. But I just want to ask, with over 10 years in finance, how has your approach to tax strategy evolved, especially for small businesses and startups?
It is definitely involved, because I discovered what the need is. The need is that most entrepreneurs, they lack, right? They lack because they're trying to start up their business, or they're trying to keep their dollars, and they end up making a lot of mistakes, right? Mm-hmm. And so over time, what ends up happening, they end up paying for those mistakes. Got you. So tax strategy is what keeps your dollars in your pocket, but it also is education.
Mm-hmm. What have you seen them mess up in?
Generally is them doing their own books. And then when it's time to get a loan, or, to get a house, their financial statements are not in order. And you're talking about years of not being in compliance. And so it takes them to spend a lot of money in doing that. A lot of it is mismanage your money.
Yeah. So are you bookkeeping as well? You have bookkeepers that you can refer out to, or?
So yes, I do provide accounting services.
Yeah. Okay. Accounting, because I know it's some accountants that don't do taxes.
Yes, indeed.
So you do it all.
I am your one-stop shop.
Oh my gosh. Okay. And then let's get into some of the things that that you wanted to touch on? Because I think it's important for people to understand doing it yourself versus using a professional, pros and cons, things like that. So let's get into it.
Absolutely. So I'm going to direct this to anyone that's watching this podcast live, is that the number one thing that I find in our community is that everybody is trying to, hold tight to your dollars, and you're trying to do it on your own, right? But what you're missing is that when you hire a tax practitioner that specializes in tax planning, I don't mean someone that you just go and do your taxes and you're just a number. I mean someone that when you give your tax information to, they look for every possible legal tax code to help you in your tax situation. They are purposely have the mindset to strategize to keep more money in your pocket and also to help you reinvest into yourself. And so I would challenge you that when the next year comes, to make sure you find a tax practitioner that specializes in tax planning, because one, it'll save you money. Number two, it's going to educate you. And number three, that's what's going to keep your money, keeping you with economic stability. A lot of times we run out of money.
Yeah.
We run bankrupt because we're in debt. But if you know how to accumulate your money and invest your money, you make it go further.
Oof. Let's talk about, okay, see, now I'm getting excited because that's why I'm at trying to make it go further. I do have to give a shout out to you because your 6-year anniversary,
yes,
having your own business, doing this accounting for people is coming up.
Yes.
Congratulations.
Thank you.
That is not, we was just talking about that a little bit ago. That's not easy to do. No. And most people quit at the 5-year mark.
Yes.
Because they don't have enough clients or they are not making enough money or, things like that. So congratulations. I just don't want it to go over nobody's head. So what do most people misunderstand about tax season versus year-round tax strategy?
Oh, that is so good. So that is so good. A lot of times people don't really think about things until it's time for to get your taxes done.
Right.
But what you're missing is that you should be having a monthly review of your finances. The same way you check your bank account, you should be reviewing everything, what it takes you to spend on operations. Are you borrowing money? Do you need to borrow money? Are you in a financial position where you can get money for your business? Are you missing grant opportunities? Because the first time you go and apply for a grant or loan, they're going to ask you for your financial statements, right? Yeah. And so they don't think about it until it's tax season. And guess what? Whatever you didn't do before the year end, you don't get to go back. So every month or every quarter, depending on your business structure, you should be reviewing your financial business position.
Okay. So I'm assuming that you've seen people miss out on a lot of tax breaks or opportunities.
Yeah.
Which is why you saying this right now.
Yeah.
How much money or how much do you think people usually lose by not doing that?
So it all depends because it depends on your assets.
Oh, okay. Okay. Let's get into it.
Right? So you have some clients, they have multiple assets, right? They have homes, they have vehicles, they have all different type of things, right? Some people don't even really know about depreciation, right? And how it affects you. Some people feel like if you only get Social Security, they're trying to hide the rest of the money that they do. And it's a myth. Like, you can make as much money as you want to. Some of your Social Security will be taxable, but you can still invest into stocks. You can still do all of these things. So a lot of times, because we're not educated, we operate a certain type of way because it's traditionally instilled in our community.
Yeah. And I think that's good too. And I think it's a lot of people who I don't know if this is still a thing, but some people just don't trust banks. Like we got a thing with mattress money. And something that I came across the other day, somebody was telling me their money, sometimes their money is not all legit. Okay, so they have the money for a house, but it's not necessarily, like, you can't put it on paper. So it's like the way that the system works is like you need to, I don't want to get into that too much, but I'm just wondering if you come in contact with people like that.
I generally don't.
Okay.
But if I did, from a professional standpoint and with due diligence and ethics, right?
Yeah.
Because a lawyer, if you were having that conversation with a lawyer, he would give you legal counsel.
Yeah.
And as an accountant, pretty much what's not in your bank account is not tracked. So, it's one of those things where you have to, at some point, you have to get it right. Okay. So if you want to accomplish something, you have to do it the right way.
Yeah. Okay. I completely agree. What do you say to people that say I can just use TurboTax?
So I contracted for TurboTax for 3 years. Yes, I did. They lack from having a one-on-one experience with someone. The education piece, you don't get, okay, here's what you did wrong. You don't get guidance. It's kind of like a built-in system. You put your data in and it tries to give you an output. It's data entry. It's not like a real human that's saying, hey, if you do X, Y, and Z, then this will be the outcome. You know that if you were to make some of this scholarship money taxable, that, you can have more or qualify for more education credit, right? Because you only can get it for like 4 years for your child. So with data entry, you going by just what the system does, but the back end is not structured to say, hey, you might want to take advantage of this. You only going by what's systematic.
Yeah. Okay. I like it. I mean, the human approach can't ever be. I just don't think it can be duplicated. You can't.
It can't.
Yeah. A question. I'm sorry. A tax strategy every small business owner should know, but probably does not.
I'm going to say your children. You can put your children on payroll. Now, legally, they do have to do some work, whether they shred it for you or whatever.
Yeah.
But you can actually put your children on payroll at a reasonable salary, and it's a tax write-off. So the same way that you give your children allowance for doing a job for you, put them on payroll. Get that write-off. The money's still in the household.
Yeah.
Get the write-off.
Yeah. Yeah. And it's like it's a cap, right? That you can pay them.
It is a cap. But think about if you got 2 or 3 children.
Oof. Oh, you can. Oh, the cap is only limited
per child.
Oh.
So that is definitely one strategy that a lot of people don't know about.
Put your kids to work. Do they have to be a certain age?
Again, it has to be reasonable, because in order for a child to be able to shred something as simple as shredding, I would say 5 or 6 or 7. They're at the capacity to be able to know how to shred paper, right?
Yeah.
It don't have to be as much as they got to learn how to do data entry. They work for you. The job was shredding paper.
Oh wow! Okay,
it's a written out job description. It's a legal. You
can write out shredding. Okay, where do you write?
Right, your job description? This is their job function. They are a shredder for my company, and they work. These are the hours that they work.
Wow. Okay.
They're on payroll. You paid them the money; it still stayed in the house.
Yeah. I loved. Oh yeah, we getting into it. And I'm gonna just ask too. When you hit the little cord right here, it gives some feedback. Okay. So cause I just want to make sure. It's clear. People is because this is good information. This is good information.
Okay.
How can proper reallocation and cash flow planning improve a company's tax outcome?
So proper allocation. So I had a client, and it was misallocated in regards to depreciation. A lot of clients, they miss the depreciation. So it's 2 things that happen. Now I know this might be a little
high level,
but let me break it down to you. Your vehicle that you use for work, you're 100% entrepreneur, and you use it to go travel to your clients, et cetera, et cetera. What you purchase that vehicle for, okay, you can actually put that in your business, right? And let's say you bought it for $75,000. You get to depreciate over a certain amount of time. So every year, automatically, until the depreciation is gone, you get to use that as a write-off. Misallocated. Some clients only put in for their mileage. So you only calculate it for your mileage, but you got a vehicle that you never put in service. You just put in for the mileage. Now, there are the tax code, and there's a gray area with that, but I do find that.
Okay. So is this the same as the 6,000 pound rule, where you have to have a car over 6,000 pounds in order to write it off, or is this something? So different?
The 6,000 pound is so you have different vehicles. You can have a Mercedes, and put it in service.
Oh, okay.
Okay, you got your 6,000. It has its own classification. So each vehicle or asset has its own classification and its own set of rules. Like equipment and computers could be depreciated over 7 years. Vehicles 5 years. If it was a rental property, 27.5 years.
So it doesn't necessarily. It doesn't have to be 6,000 pounds. It can be any car. It can be as long as it's in service
for business.
Okay, and does it? So does in service mean that you have to buy it under a business name?
No.
Oh
no. Now, if you're talking about S corporation, because every business has its own classification, so you got your LLCs. Most of my business owners are single member LLCs, right? Mm-hmm. So that goes on your personal return. But if you were an S corp or a C corp, then that entity has its own personal return. And while we're here, I want to clear this myth right now because I get it, I see it, and I want to clear the air with it. Clients are calling and say, "Hey, I did my personal return, but I didn't do my business return." Well, what type of business did you have? I have an LLC. Okay, well, let me see your EIN letter. Guys, check your EIN letter. If you're a business owner, check your EIN letter and make sure you set yourself up as a regular LLC. I found that clients set themselves up with a partnership. It'll tell you. I've seen clients set themselves up as an S corp and a C corp, and they don't even know. They just think they're a regular LLC. So in regards to the classification of how you file, there is no separate business return. If you're a single member LLC, your Schedule C is where your business income is reported and is attached to your 1040, which is your personal return. So they are together. There is no separate business return unless you're a C corp, a S corp, or a partnership.
Okay. So it's the same one.
It's the same tax return. I get it every year, several times a year. And what ends up happening is I have to go back and amend your tax return. And when you do an amendment, it puts you at risk for an audit.
Okay.
So this is why you want to get it right the first time.
Yeah. Okay. And then while we here, would you mind breaking down the difference between C corp, S corp, LLC?
Sure.
Yeah.
All right. So number one, before I even get started, you cannot put yourself on payroll.
Okay.
If you start an LLC, you cannot put yourself on payroll.
Okay.
If you're a partnership, you cannot put yourself on payroll. If you want to pay yourself, the money that you take out for your personal expenses or you take out of the company is what's considered you paid yourself.
Okay.
Do not put yourself on payroll. Now, LLC is basically an entity outside of just yourself, right? So you have your podcast. This is your LLC. It has its own entity, but it belongs to you. You're a single member LLC, right?
Yeah.
Me and you, we decided that we're going to do a partnership together in this business. So we're going to develop a partnership. And if we develop a partnership, me and you, we work together, we put money in and we distribute evenly whatever the profits are or whatever our agreement is, then now we have a partnership.
Okay.
And that partnership has a separate tax return.
Okay.
Now that tax return, when you file it, it gives you a K-1 that comes to your personal tax return.
Oh, okay.
Your S corp. So for my clients that are thinking about becoming an S corp or when do you become an S corp, I generally say you should be an S corp once you profit over $50,000. Meaning that out of all the money you made and after you paid all of your expenses, once you start profiting like between 50 and 70,000, you can start looking at becoming an S corp if this is going to be a long-term profit for you.
Okay.
And here's why: because you have to put yourself on payroll. You have to make enough money to put yourself on payroll.
Okay, because the S corp, that's the entity where you can pay yourself.
Yes,
you have to pay yourself.
You can put yourself on payroll.
Okay.
Yes, you can. And that S corp still kicks you back, just like the partnership, something called a K-1 that you attach on to your personal return. Now, I want you to keep in mind, they both kick back to the personal return. Okay. C corp has its own entity. It doesn't kick back to anything. It's its own tax return. It's not attached to you personally.
Okay.
As far as your personal tax return. So you got your LLC that belongs to your 1040, which is on your Schedule C. You have your partnership, which is a 1065, and then it kicks a K-1 to your tax return. You have your S corporation, which has its own tax return, which is an 1120S. It does kick back to your personal tax return. And then you have the 1120 that has its own tax return and it doesn't kick back to anything.
Okay. Oof.
Now I know that's a lot of information,
It's a lot of numbers,
but you got to know.
You got to know it. Well, let me tell you about a situation that a friend going through right now. So they had business partners. They had a business, and the two business partners who they bought into the business with, because it was already an established franchise. It was two business owners already. They are married.
Okay.
So my friend bought into this business with the married couple. So now the friend is on the LLC. However, as the person was trying to do their job as the CFO, the person did not have access to any of the finances, and the two business partners would not give them access to it. So now the partnership is trying to dissolve.
Okay.
In so many words. That's what I'm going to say.
Okay.
However, my friend had to file an extension on the tax return because the people are not responding about the K1. So it's like, how do you navigate that? Have you had that happen before? And are there any other things that this person can do to fix it?
So it's interesting, for one, because number one, the moment that you said about buying into a partnership, first of all, partnerships are messy.
Yeah.
They get complicated, and trying to get out of them can be like a worst nightmare. The fact, and unfortunately your friend had to go through that, but in due diligence, they are supposed to kick that K1. If that person invested into that company, et cetera, they should definitely be, providing that. So from a legal perspective, I would say hire someone.
Yeah.
When it comes to that.
A lawyer or an accountant, or just both?
So it all kind of revolves back to the operating agreement. When it came in, the number one thing that we find with partnerships is the operating agreement.
Yeah.
They don't actually put it together. It's all verbal.
Yeah. Yeah.
So when you have a legal situation such as this, you got to go back to the paperwork. And when you don't have any paperwork, now it's kind of he say, she say, providing backup, et cetera, et cetera. So this definitely, at this point, is a legal matter.
Yeah.
In regards to whatever that was invested, whatever the profit was, and whatever their portion is. If it's dissolving, they can buy her out, give her back her money, and keep going. But that's definitely, when I hear things of that nature, it comes up as ethical. Yeah. And ethical means that something is not right.
Yeah. Yeah. And even still too, like, it gets really messy. I'm not gonna get too much into it, but that's good advice. Like, when it gets
absolutely.
to the point
partnerships are messy.
Go back to the operating agreement, and if it's getting to the point where y'all can't agree, go ahead and get legal counsel.
So you got to start it up. That's why you should consult with a lawyer. A lawyer's going first thing is have that paperwork. Same thing with the contract. I understand it's a great idea. We're gonna make potential money together, but you have to have that contract in place.
Yeah, I mean the contract is ironclad. So the operating agreement is fine. If friend was to take it to court, it would be fine. But right now, in the process of trying to settle, however, that's just not working. So the due diligence, it was done to the point where the operating is good. However, it could have been done a lot better when choosing the partnership.
Understand?
Yeah. All right.
Wish them the best of luck.
Yes. Oof. All right. Let's do some fire round questions.
Okay.
What's one expense you never skip writing off?
Mileage.
What's more important? Saving money or making more money?
Saving money.
I wasn't expecting you to say that. I guess that makes sense though.
Think about it.
Saving money or making more money?
You can make as much money as you want to, but if you ain't saving nothing, you still don't have nothing.
That's true. Okay, that's true. That's true. All right. Payroll or bookkeeping? Which one stresses clients out more?
Payroll.
Okay. Because they can't meet it sometimes, or?
A lot of entrepreneurs struggle with payroll because they have to pay a portion of their employer taxes.
Okay.
And they have to pay taxes on top of those taxes.
Why is it so many taxes?
Hey, I didn't make the tax
rules.
I
know, but I'm just like.
So payroll is stressful. That's why, A lot of people are trying to pay people underneath the table, et
Yeah.
cetera, et cetera.
Yeah.
I'm just going to tell you right now, if you don't have a budget for payroll, keep striving and excelling until you do to pay your people right. Hire contractors, the legal way when you can, and make sure you send that 1099. Because if you didn't send that 1099, then you're going to pay the taxes on what you paid the money at the table.
Yeah. Okay. And it seems to me that the tax code was created for business owners. Because if you're a W-2 employee, it's like, I feel like you just giving the government a debt-free loan the whole year. And then they give you back in the form of a refund. However, when you're a business owner, you pay for everything up front and then you pay on the back end.
So it's a two-way street.
Okay.
So for my W-2 earners, right, you got a lot of, some people don't want to invest into their 401k because they need to take all their money home.
Yeah.
So they're leaving money on the table. They're already matching you.
Yeah.
And little do you know that actually invests. Little do you know if you put money in there, it defers your taxes. So you're going to pay less on what you pay on your taxes at the end of the year. Second of all, you can actually borrow from it while you're an employee.
I didn't know that.
Borrow. Don't do a hard withdrawal because that becomes taxable at the end of the year. But you can borrow against your 401k as an employee, depending on the industry you're in. Because I know like my teachers, I think they have like restrictions. Some, depending on who you are, you have restrictions, but you can borrow against yourself and then pay yourself back plus the interest. Now, how I got to where I am right now, I had an exit strategy that when I left the corporation, I overinvested my 401k because I knew that when I left, that was going to start up my company.
But what you're saying is so important because it's people in my life that I've said like, yo, put something in the 401k. They're matching you, match it. And they were like, no, I need all my money. And they finally listened. And now they were like, they looked at it, they were like, oh my gosh, it's $5,000 in here that I didn't, I didn't work for.
You can't spend what you don't see.
You didn't, it's automated. I say to people all the time, automated. Start like that. Okay, so now we got to talk about, how you overfunded this retirement account. And was it a traditional account or a Roth IRA? Does it really matter?
Corporations normally give you the option to do both, normally.
Okay.
So,
okay.
I actually had both, but I invested more in my traditional more than my Roth.
Okay.
And I actually found
Why was that?
Just because I wanted to defer so the Roth, you don't get really that deferment. I needed it to be deferred as much as possible because my kids were over 17. So that tax credit that went from $2,000, it goes to $600 when your kids turn 17 or older. So that little credit that you get every year, right? And so I was already ahead of the game because I've been studying taxes prior to.
Yeah.
So I already knew how my money worked, right?
Okay. Yeah.
Now, one thing that I did make a mistake in, and this is one thing that I talk to all my clients. See, God don't take you through nothing for no reason. It's always a purpose in why he does what he do.
Yeah.
So every client that I deal with, I look at tax strategy. I look at their, are they having enough withholdings? I educate them where they are. Whatever situation that they have, I'm going to make sure that they have knowledge of what they can do better. I congratulate them, encourage them on what they've done great. And then I talk about whatever else is left on the table. But the mistake that I made was that I didn't know that me taking a hard withdrawal from my 401k, number one, it suspended me from being able to invest for 6 months. And then that money that I took out was added on top of my salary, at the end of the year. And so now I put myself in a worse tax situation than I would have been in at first. So that's why I'm very adamant about the investing into the 401k over, especially if you know you're going to leave that company. You know you're not going to retire even if you know you're going to over invest into it, borrow against the money, do what you need to do and pay yourself back. You running around trying to get a loan and lending, your credit might not be the best. You already have an investment vehicle already attached to you. Yeah. Use it.
Yeah. Yeah. I like that because you said something important. You knew how your money worked.
Correct.
And I feel like I do tell people just in general, I'm like, I would recommend a Roth because it's pre-taxed. So they say like usually if you are investing in a Roth, you think that you're going to be making a lot more money when you retire. So when you pull the money out, it's not going to be taxed. However, you invest in a traditional account, when, you know, you feel like you're not going to be making that much money because your tax rate would be lower if you're not making that much money. So that's why I guess that was the difference. And I know a lot of people say like younger people should do Roth IRAs, but what you saying is important because you like, look, it just depends on your situation. Your money.
Does. It does, and what the end goal is. Because I mean, for a lot of us entrepreneurs, I mean, retirement is just not it. We're living our best life. We're living retirement. We're saving. We're excelling. And when we look at 65 and 70, like we're working on trying to be millionaires already and being by 40.
Yeah.
So retirement for us is millionaire. I mean, you know, the traditional worker for a company 30 years at, you know, Nabisco, we're not in that generation or that mindset.
Yeah. It's definitely a different time.
It's a different time.
Yeah. It was a guy who was talking to me the other day. He was like, man, y'all young people, y'all just out here just doing stuff. Like, he was like, I worked at the same job for 40 years. And like, you got a podcast and you got the house and you doing the real estate. I'm like, he's like, yo, y'all are different. Everybody, everybody he meets, all the millennials.
You know what broke my heart was
that?
For my clients that come to me that's in retirement. I have a special place for seniors and my retirees.
Okay.
They work for 40 years at Philip Morris. They come out, don't have life insurance. You got to think about when you leave a company, whatever benefits you have with that company, stay with that company. Which means why you have to build something on the outside of your company.
When you retire, your benefits stay with that company?
Yeah. You can pay for them. They're going to be high.
Oh, I thought
And guess what? The whole time you was building with that company for 40 years, the policy you had was a term policy. So when you became a non-employee or retiree, that policy belongs to the company. So you have built nothing. You have given them when you could have had 40 years of cash value working in another policy. On top of your pension. On top of your Social Security.
So you would recommend a whole life insurance policy?
Let me say this.
Okay.
Because it's a lot.
Also, we are not financial advisors. This is not advice. Please consult a professional before you make any investment decisions.
Absolutely.
That's our disclaimer.
And being that I'm licensed financial representative, I'm going to speak on this and I'm going to leave it right here.
Okay.
If you do not take out something outside for yourself and another company own it, when you detach, you have nothing. So if you work for a company 40 years thinking that you're good because I pay into it from my paycheck, when you leave that job, you have to start over. Most people that when they retire in 40 years, their health is not the same. And it costs them so much money to get whole life, if they wanted whole life, that they end up having to get term, which is going to terminate because it's not permanent insurance. Yeah. And on top of that, long-term care, this is why we got our folks going to the nursing home. You get the right policy, you could take money out and get you and make sure you got a great nurse to take care of you. We don't really think about these things until it really happens. So that's what actually drove me into being a licensed financial representative in the accounting industry, because I had a lot of clients come to me and they had life events. And they needed their tax refund to help take care of those life events. And of course, it depended on the tax code. As you can see, the Trump administration, the tax code changes every year. So every year it may not work in your benefit. What you normally get, you may not get. So you can't even depend on that. So what are you going to do?
Yeah, and that's definitely something I feel like we don't talk about in the Black community specifically. But it's business in the hood all day long. It's the clothes is looking nice, the fashion is good, but it's like in the back end, the things aren't really, you're not comfortable. You just living, not living for tomorrow, just living for the day.
Listen, as long as you got some type of policy, it is satisfactory because you have some type of security. As far as it being whole life or whatever it is, but as long as you have something, it's better than nothing.
Okay. And I asked this question to a financial advisor before. I was like, do you recommend whole life or term policy? And he didn't really answer. He kind of said like whatever works best for you will work. I just feel like people need to lean more into whole. It is more expensive. It's more expensive. It is,
but it has to match your budget. Everybody can't afford whole life.
That's true. That's true.
So again, it's all into where you are. Just because you may be in a struggling season, God is not going to always keep you in a struggling season.
Yeah.
Right. And when your financial situation changes, then you can invest in some other options. Mm-hmm. But if right now, if this all that you can do, at least you got some protection.
Yeah. Yeah. And you can apparently change term policy into a whole life policy as well. So.
It depends on the product, right? Mm-hmm. It's just like going to Lexus and going to Hyundai.
Yeah. Okay. Well, yeah.
Every company, your banks, Chase and Bank of America. Okay, you could both have a checking account, and both the experience may be different, and what they offer you may be different. Like Navy Federal Credit Union. Every company has its own pros and cons and bells and whistles. It just depends on your situation, what's going to be the best match for you at this moment. May not be you stay here forever, but this is where it is.
Okay. Would you rather have $700K in revenue and $200,000 in profit, or $400K in revenue and $300K in profit?
I'm going to take the $300K in profit.
Okay.
Because I only spent $100,000 in operating expenses, which means I kept my overhead low, which means I'm doing fairly well, and I have more flexibility in how I utilize and invest my money.
I love that. I love that, because I feel like revenue and profit is two different things. Because we could be making $45 million a year. A month. But if we spending 44.5, we ain't making no money. You ain't making no money.
That's correct.
Well, now I'm interested. Like, what was your first relationship with money? What was your first memory of money?
Of course, our first job and getting my first bank account. Right.
Okay. What was your first job?
One Price in Southside Plaza.
Okay. Nice.
20 plus years ago.
Yeah. Yeah. And did you grow up in a 2-parent household?
I did.
You did? Okay.
I did.
What did your parents do? Or what do, I don't know if they...
So my father, he was a manufacturing laborer, and my mom was a private duty nurse.
Oh, wow. Okay.
So I didn't grow up with a lot of money, and it was 4 of us.
Okay.
So, yeah. If I don't know how to do anything else, I know how to survive. And I know how to stretch a dollar.
Okay. When was the last time you had to stretch a dollar?
I feel like I stretch a dollar every day.
Okay.
Because you got to look at the price of everything that you're spending.
Yeah.
Right? So even I could have, it doesn't matter what I have in my bank account. I'm never too big to not look at what I'm spending. I'm conscious about it.
Yeah. Yeah. Same. Because I have, I do some real estate investing and stuff like that. And nice. I was able to make a good amount of money. My background is a nurse, and I was traveling for work, and I was making good money. And then I decided I don't want to be a nurse anymore. Like, it's almost like a bit of PTSD when it comes to that. I was an ICU nurse for a long time. And yeah, I saw a lot of people pass away in nursing school. And I've said this before, nursing school teaches you how to save lives, but not necessarily like what you do after you've done what you're taught and they still pass away. So I think I have a lot of, I have a lot of issues within myself with that, thinking it was my fault and thinking that, I could have done more. So it's to the point now where it's like, and I've heard entrepreneurs say this before, it's like, this gotta work. It's no plan B. This has got to work. So I flipped the house, made some money, and that's pretty much been like bankrolling me. And it's been almost a year that I haven't been full time. I still work maybe like once or twice a month. Like, I'm going to work tomorrow for like 6 hours, but that's pretty much all I can do. So this gotta work. And then CPAs, accountant. I'm not sure if you're familiar with Miss Business 101. Shaquana Brooks.
Yes, Shaquana Brooks. I haven't met her in person yet, but yes.
So she is the reason why I decided to buy a house while I was going to nursing school.
Nice.
And I was like, I'm going to school. Like, I can't do this. Like, that doesn't make sense. She was like, girl, either way you paying somebody's mortgage.
That's correct.
And I always shout out her and Kiana Watson. I love them.
Yes, I follow Kiana too.
Yeah. And you have kids too, right? You
a boy and a girl.
Oh, wow.
Yep, a boy and a girl, 23 and 21.
Oh my gosh. Okay. And then I asked this to everybody. Are you dating?
I am.
Okay. How's it going?
It's going good.
Okay. You want apps or anything?
No.
No? Okay.
No
you
apps.
Just meet people in person.
Well, I mean, So I've been off the dating like scene for a while.
Oh, okay.
I should say.
Okay.
So yeah, we've been friends for a really long time.
Okay, shout out to you. Wherever you at. All right. Where we at? Refund or break even? Which one do you aim for?
It depends on the situation.
I feel like most entrepreneurs would say break even.
Break even means you didn't make any money. Refund, did the credit get you there? Then that means you still had a profit.
But I thought entrepreneurs say like break even means that you don't owe the IRS any money.
Right, but if you
made money.
If you break even from a financial perspective, that means you didn't make any money. So if you made $200,000 and you had $200,000 in expenses or more, you didn't make any money.
Okay.
This is why we can't get ahead, because a lot of people do this on purpose so they don't have to pay taxes. But from a financial perspective, you might have made $200,000, but you didn't keep $200,000, which means that you didn't make any money. So you breaking even actually financially hurts you. Okay. If I'm going for the refund has to be a credit that puts you into refund status. You can still have a profit in your business, and you might have had enough tax withholdings. Those that work a W-2 job, that pay in their taxes and have a business that can still show some profitability in their business. You got some people that pay estimated taxes. You got so many different, you might have went to college. You got so many different things, but break even to me, especially if you're trying to buy a house or anything, is like a worst nightmare. I get it all the time. I have to fix the tax returns. Now you got to show that you actually made some money, but you just told the IRS you didn't make no money. Okay. So which one is it?
People getting caught up. Getting caught up. Which one is it?
Which one is it?
You want me to ask, or you want them to ask? Yeah. What was your moment as a financial pro when you was like, I know I'm that girl. Like, I did that. Like, something you just did, and it was just like, wow, I really helped somebody, or I changed somebody's life, or...
For me, my third home closing. So no, I'm not a real estate agent, but what I do is I specialize in self-employed individuals. I help them get through pre-approval. Okay. Mm-hmm. Because when you're self-employed, you go through a lot of red tape. Yeah. So when I got to my third home closing, I was like, Artensia, like you're the girl. Like, you know your stuff. Like, you telling lenders what the numbers are at this point. You're over realtors' head at this point. Like, you making it happen. So you done went from accounting to helping one client save over $350,000 in taxes. Ooh. You go from serving the community and doing financial education and empowering and encouraging others in their households, saving lives, making sure that their families got, life insurance, making sure that their children, all you taking care from I believe in a holistic approach. I just don't want to have one conversation with you. I want you to call me when you go through things, whatever resource that I could be to you, I'm going to be that. And now that I've stretched myself out wide, you can call me and I could connect you with this person. I could connect you. So I thank God for using me in that manner. Yeah. So that's how you know you that girl. I don't need the spotlight. Yeah. I'm a hidden gem, and I'm okay with that. It's not, I don't like to self-publicate myself.
Well, and I talked to a few different accountants, and one of them was saying that he doesn't really need a lot of marketing because his clients, they keep coming back to him and they pay very well. So he was like, yeah, like usually like accountants, from what he was saying, statistically, we really don't have to work but for like 10 years and then we don't have to do it no more. So now he's doing more like speaking engagement. I think he's in Africa right now doing something with the crypto people. So yeah, I'm just like, all you guys are hidden gems for real. Like, that's I love talking to you guys because it's like a wealth of knowledge.
Thank you.
It's a wealth of knowledge. What's the I might have asked, did I ask this already? The most slept on tax deduction.
So I'm not gonna say mileage and I'm not gonna say depreciation. I'm gonna give y'all one more. Education credit.
You did okay.
I'm gonna say that it's slapped on because a lot of times, depending on who the tax, so this is why it's so good to know your tax knowledge.
Mm-hmm.
You can, if your child got more scholarship money than their tuition, right? You're not gonna get an education credit, but you can make some of that taxable to your student because they're your dependent. They didn't work that much. And remember, it's almost back to that W-2. I was telling you that you could put your children on payroll. And so if you guys look at the filing threshold every year, 14,500, right? You make some of that scholarship taxable at 7,000, still will not be taxable. It's underneath the threshold. Mm-hmm. It's slept on.
Yeah.
It's missed.
Yeah.
All the time.
Yeah, I'm sure I missed it.
And you only can get it for the first 4 years.
4 years. Mm-hmm. Mm-hmm. Yeah.
And you need it. Your baby college expenses are high.
So if you don't use it in that 4 years, you lose it?
Yeah.
Oh, man.
Yeah. Because once that child go to graduate school, it's over with. As far as the opportunity credit, there's another credit, the lifetime, but it's gone.
Yeah, okay. And you've recently begun working with nonprofits.
Listen. Nonprofits, I serve on a board for Dress for Success for nonprofits.
Okay.
And outside, a lot of nonprofits have been getting me to do their tax returns.
Yeah.
I believe in this trade that you stick to where you are wanting to excel in. Nonprofits is a whole different animal. Mm. Okay.
Yeah.
But as my client grows, because depending if they have nonprofits, right, it's always good to have one person where everything is there, so that way when they're tax strategy, they're not missing anything. So, yes, I am working with nonprofits. It's not my favorite cup of tea.
Yeah.
But I serve who needs to be served.
But how does tax strategy shift in that space?
Because a nonprofit is not for profit. They move their dollars. They move their income is donations, and then they have to distribute it, right? So it's a lot of written work versus a for-profit. I made the sale, we clock it, we're done with it. In a nonprofit, you got to have a board. You got all this paperwork that you have to be in compliance with, right? So you have a lot of more to do in that aspect. And that's where it gets critical at, because you got to have a good accountant, right, to oversee all that.
Yeah.
Because another strategy is you could actually donate or invest into your nonprofit. But the IRS already knows about some of the windows, so you got to make sure that you're in compliance with it.
You can invest into your nonprofit, you said?
Like why you can't put a charitable contribution into your nonprofit? That's how it receives money.
You yourself can.
The LLC can.
Oh, okay, I got you. Because I know everything with a nonprofit. I don't know a ton about them, but I know everything is public information.
Everything is public information, but a lot of entrepreneurs get in trouble with it. You see it all the time on the news. So that's why I'm very cautious about it. But yes, you can.
Mm. Oof, okay. Is it a cap? Like how much?
It's always a cap.
Always a cap. Okay.
It's always a cap.
Okay.
Trust and believe, it's always a cap.
What's the difference between like a person like me or anybody and Trump? Like, it seems like he knows things that other people don't, especially when it comes to this like whole making his yard into a cemetery type situation to get that tax credit. And it just seemed like he knows a lot more than the regular person does. Remember
I said this, the more access that you have.
Yeah.
It has its own classification. You got to think he owns hotels. He has so many different things of, it's just like taking a business trip. I'll keep it simple.
Yeah.
You got some clients that will have a birthday party at a mansion.
Okay.
The birthday party is technically personal, but they had a business seminar there for at least 4 hours. Now it becomes a business write-off. So it's those things. Simple like that.
Do you think the playing field has been leveled because we have so much access to information? Or do you think it can be leveled?
If I gotta be honest with you, level, I can't say that it's level.
Yeah.
And I'm gonna say this is because traditional, what's been exposed and what's available is limited.
Yeah.
There's always gonna be some type of limitation and restriction. Because if it was accessible to everybody will be doing it.
That's true.
There's conversations been held in a private room for a reason. If it's meant to be held with everybody else, it would have been meant to be held with everybody else. And it's your responsibility to educate yourself.
Yeah. Yeah. What can you touch on about trust? Because that's been a pretty big topic lately.
Trust is one of those things, as an accountant, you can't operate in business without trust. I protect my clients, and I don't even expose who my clients is. I don't talk about my clients, right? Mm-hmm. They trust me. Even though they say, Artensia, you should let them know that I don't. I protect my clients like a lawyer. I fight for my clients.
You got some celebrity clients?
I'm going to say he's a celebrity, okay, but not in the entertainment world. But I'm going to say he's definitely...
You're getting to the bag.
He's in some high places, and he's definitely tapped into a lot of things that's happening right now.
Got you.
Here. So, but trust is, he can go to sleep and don't got to check his bank account.
I can't wait for that. Yeah.
That's trust. Trust is, the benefit of... You don't even need a benefit of the doubt.
Yeah. Yeah.
If I felt like it was something that would hinder one, I would resign. I have a conversation with them. Like, I'm big on trust. Okay. My character is, I'm big on trust. Your character it shows up in your business. It shows up in every part of your life.
Mm-hmm. Mm-hmm. And what do you know about this Augusta rule? Is that the one where you can rent your house out or rent your house out to your business?
So you got rules where you can rent out your home for like 14 days.
Okay.
And you can put that in. That'll give you some deduction.
Okay.
Especially the people that have rental properties. And even if you don't have a rental property, if you
can
rent
do
the house out 14 days, you get a nice little credit there.
Ooh.
Some people do miss out on that. So that's something that's slapped on.
I've never used that.
Homeowner. So
wow.
Some people sleep on that. Well, they don't sleep on it. They just don't know about it.
Yeah. Yeah. And if they hire you, they would know about that.
So I go through your situation. It just depends on where you at. You're a homeowner. Okay, well, I have I just look at different things and just see whatever else, if you owe some money, I look at what credits that could potentially be available to you, of that nature.
Yeah.
But I mean, if you've rented a property, you've rented a property.
Yeah. So you said it's basically...
I mean, don't say you rented out the house for 14 days. You didn't rent the house out for 14 days.
Yeah.
If you rented a room out for 14 days, if you got a tenant or a roommate, then okay.
But
right?
they saying you can rent it out to your business too, your LLC.
I'll have to look
You'll
into that.
You'll have to look into that one. Okay, stay tuned alert.
Yeah, I got to look into that.
Stay tuned
I got to look into that.
Because that would be beautiful. You rent
out to your business. I mean, I work in my office at, in my home. So am I taking a home office or what else am I doing?
Mainly for like, I know somebody was saying they did it for like an event. Like they had an event and they were going to rent out another space, but they had an extra room.
And so they use that as like a venue space?
Yes.
Is that
pretty much like a venue space, yeah.
Okay.
Or like a content creation space.
Okay, so basically they renting out a studio space instead of paying a local space. They're renting it out. I would just have to, because to me,
you had to look at the situation.
It's kind of a gray area to me.
Yeah. Okay.
So that's something that I would really have to look at. Who would that be more favorable to?
I got you. Well, I got an event coming up on the 21st, July 21st. And I want you to come. I'm seeing an invitation.
Okay.
But I got to get me a new outfit. Okay. And, I might got to get like a necklace or something for the event. Is that a write-off?
So I get this all the time. To my influencers.
Yes.
They, that's their job. They get paid by showing up, they do that every day.
Yeah.
Influencers, they go and buy clothes for photo shoots. Like, okay. You're going to wear that more than one time. But check me out though.
Okay.
You may wear it more than one time and not just for that function.
Yeah.
Right?
Realistically, yes.
Realistically, correct?
Yes.
So there's a thin line to that.
It's a thin line.
Now, what you bought for it and you use it on your show as a part of your,
Yeah.
Okay. But jewelry is like, it wasn't really a necessity. And was that because it says reasonable.
Okay. Oh, it gotta be reasonable. Okay. So just, it probably just had to be clothes, shirt, and pants.
Me being the accountant, I probably would say that would be reasonable.
Okay. Okay.
Now, if you gifted that to someone,
out.
if you gifted that to someone for their 20-year, company celebration or something like that, I write it off as
a gift.
I would write it off as a gift.
But I thought the gift had to be like $25.
Gift tax.
Wait a minute.
So there
is ways.
If you gifted that to someone for their 20-year company celebration, gift expense.
Okay.
Okay. If you put it in a sponsorship or for a cause, a charitable contribution, whatever the value is, you got different ways you can go about things. But you just personally buying it because that's what you wanted to buy for this particular venue.
Mm-hmm.
There's a gray area. Was that even reasonable for you to make that purchase?
Okay.
I don't want to argue or debate with you about it, but is it?
Yeah.
And the clothes that you wore, reasonable, right? Because you're gonna wear them. You can wear them for work. You're on podcast. You show up. It's a part of your job.
Yeah.
Of course, I'll write that off.
Okay.
But reasonable, you just wanted some jewelry to add to your collection.
Okay. All right.
I know, but I have to have these conversations.
Right.
Because if you get audited, how you supposed to explain that?
Okay. Do you handle the audits too, or is that kind of just?
So yeah. So my clients, and by the grace of God, I haven't had a client to get audited. Clients come to me because they got audited.
Okay, wait a minute. We can't let that go over people's head. How long you been doing this again?
6 years.
6 years, but you've been doing taxes for longer than that, right? Mm-hmm. And in all of this time, you haven't had any audits.
Reasonable.
Okay.
I'm gonna give y'all some other education. People don't know that when you send a tax return off, like the IRS has like these checks and balances, right? And when something shows up kind of out of pocket from whatever the classification code is from a hairstylist, a photographer, like there's a genre of general expenses.
Okay.
And when there's something higher than the other, it might put you in for an audit. Okay. I'm gonna tell you right now, the worst tax return that I've seen in my life. Somebody filed, this person had a farm.
Oh, okay.
Client never had a farm. Filed said they had a farm. Said that the client paid $215,000 in taxes. Worst return of my life. Second return that I've seen, the person filed them as being in college. They looked up what the school code was, filed them as a student to get the education credit. The client never even went to college. So now you mess with federal.
Oh my God.
Now you mess with federal. So listen to me. Whoever doing your tax returns, check your tax returns, check their credentials. There should be a number which is called our P10 number. It should be identified. If you look at your tax return right now and you pay somebody to do your tax returns and it says self-prepared, you probably in trouble. Because number one, if I don't sign your tax return, what does that say about me? You paid me to do something for you, and I can't even put my name on your tax return. But you got an $8,000 refund, but you don't care about that because you got that $8,000 refund. But then when you get that audit letter 3 years later that say now you owe $20,000, now you're trying to find somebody to help you fix that, and Optima Tax Relief ain't it.
Ooh.
I'm sorry.
No, I'm sorry. Because for real, like, it's people out here getting caught up with that, using the tax lady up the street that ain't got no credentials. You getting this big old refund back every year. That's gonna catch up to you because if you don't pay those back, you go to jail, right? Like, is that a possibility?
So here's what I call a disservice to the community, right?
Okay.
For one, me getting you back a certain amount of money fraudulently, it's a disservice because I'm putting you in a financial burden.
Yeah.
Okay. And you're gonna pay back 2 or 3 or 4 times more than what you got. It's not worth it. The education piece is where is that? Hey, this is where you at. This is what you can do. We'll incorporate.
Okay.
You know, but I have 2 people that have done taxes that I know. Actually, I'm saying 3. And them clients, when they got them audit letters, it was not pretty. It broke my heart. It broke my heart. The work that they did for these clients trusting you. You said trust, right?
Yeah.
They trusting you. They want a refund. Okay. They might even need a refund. But if you're gonna go and fraudulently put their tax return together and to put them in a situation, what have you done? What good have you done? You're robbing your community.
They got paid.
That's
all that matter. That's all they care about.
You're robbing your community.
Yeah.
Now you done pay me $1,200 so I can get you $8,000. And then you turn around 3 years from now, you got to pay the IRS back $20,000 that you never had from the beginning. So now you can't even move or do anything because you still got this hurdle. And the one thing about the IRS, they gonna get their money.
Yeah. Them alphabet boys, they go get it.
So I hate to say it, guys. I mean, it's the truth.
Woo. We gotta have you back monthly on this show. So we gotta do I know you do. You on your boards and things like that too. So you out in the community. Are you from Richmond?
I am born and raised.
Wow. What high school did you go to?
Kennedy.
Oh, Kennedy. Okay. Okay. Throwback.
The real Kennedy.
The real Kennedy, not Armstrong.
Not Armstrong.
Okay, I got you. How can we support you? How can people reach out to hire you or get a consultation? Let us know about all those things.
I do offer free 15-minute consultations. Go onto my website, journalistartist.com.
And this, I'm gonna just let y'all know this right now. This amount of information that she just gave, that's $1 million worth of game. That's all I gotta say. So go ahead, get the consultation. But understand, I don't see how you wouldn't want to hire her after this. She know her stuff. Definitely, we stamped. Like. You doing it, and I appreciate the way you broke it down, word for word, layer by layer, bar for bar. Like you got it going on, and you literally came on here, and the first thing you said was, "We got to help the community."
Yeah,
like you came out here, and before you get into that too, like how has God been helping you with this in this journey? Because before we started, you prayed, you sent a prayer up, you was like, this has got to be divine. This has got to be something that the Lord is guiding me through. And I really appreciate that because I'm on that journey as well, too, that spiritual journey where I feel like nothing happened by mistake. So just give us a little bit of like how God has been helping you on this.
So God gave me the vision. I was sitting at my desk and I was going to college and I was thinking that me getting a degree was going to help further me into the corporate environment, and God will keep you in a place until he's ready for you to go next. You can do whatever you want to do, but if that's not where God allowing you to go, you're not going. And I thought I was going into the auditing department when I was working for Truist. It didn't happen. And so one day I was going through a situation with my son, and my stress level was so high. When I came to work, I couldn't even see the computer screen. And I heard a voice that if you don't get up out of this job, you're going to die here. So I left. One morning I was in my room. I went to go work for a private, predominantly all-white accounting firm. And I was working there, and God had already told me I wasn't going to be there long. And one day I woke up, I heard like this glass shatter, like somebody broke in the house. They didn't break in the house, but it was God talking to me. And so I was like, this is what I heard. You can't serve your people working a 9 to 5. And I was wrestling like, well, I'm not ready to leave yet. And it pretty much was like, regardless whether you leave now or you leave later, you're going to still have the same struggles. So you got to go. And from there, I took everything that I had. I birthed this company, and I can't tell you the amazing amount of lives that I've touched. And I know it's only God ordained. This is my ministry. This is my life. I'm going to live, breathe, die in what I'm doing. And, it feels good. Everybody's mission is not always in the church or the 4 walls. God walked in the streets helping people. He didn't say much. Yeah. And I move just like that. I don't need everybody to know what I do. But if it's meant for me to help you, I'm going to help you. Yeah. I'm going to bring you to the table. Don't mean you're going to eat. But if you eat here at this here table, you're going to be well taken care of.
Felt that in my spirit. All right, go ahead. Go ahead. Let them know. I'm looking at your Instagram right now. But follow Miss Artensia at Journal Audits, JOURNALAUDITS, and please just go ahead, get your 15-minute consultation. See what she can do to help you. You might be in a situation. I'm sure she can get you up out of it. And the only thing that I like to end with is a quote that been like sticking with you, that's been getting you through it.
Trust in the Lord with all thy heart. Lean not to your own understanding. God to set your path straight.
Hallelujah. And my quote is, service is the rent you pay on the success you get. John Hope Bryant. I love him. All right, y'all. Thank y'all so much for tuning in. This has been an amazing episode. Thank you again, Miss Artensia, for dropping by and hanging out with us. And before we go, I did the camera see that that bracelet? That what's that? A Cuban link?
Listen, it's just something small. I don't do all, I just don't do it. It's just something small. It's just something small.
Heavy. I like that. You got that ring? I don't want y'all to know who we be having up here. I mean, I just feel like people don't be knowing for real because y'all be incognito. Well,
Yeah.
You know what I'm saying? Anyways, thank y'all again for tuning in. Make sure to like, comment, and subscribe. Tell a friend to tell a friend. Peace, blessings, love, and good night.
Good night.
Beautiful.
That was amazing.
Oh, that was so good.